And welcome everyone to the Gold and Silver Club end of week review for the 30th of May 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today we'll be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for the commodities. So we'll be looking at gold, silver, oil, natural gas, coffee, amongst other commodities. We'll cover the top trades of the week. We'll be doing live market commentary and technical analysis, as well as looking at the week ahead. So the key events looking forward. And of course, we'll be answering any questions you may have on today's call as well. So gold price this week, again, lots of lucrative trading opportunities this week. We hope you caught some profits off some sell short opportunities we've had. We'll go into the top trades very shortly. The top news this week has been gold price hitting that 4-month low, and Palladium has rallied to 2014 highs. So gold prices ended the US trading session at a 4-month low on Thursday, as worries about the political friction in Eastern Europe subsided amid signs that the US economy continues to recover from a winter slowdown. Gold has hovered around $1,300 an ounce for much of the past month. So the simmering conflict between Russia and Ukraine stoked appetite for the safe haven in the wake of the weekend presidential election in Ukraine, as hopes that the new leadership could help resolve the current conflict has eased some demand for gold. We've seen the sell-off this week. So a feature in the marketplace recently has also been the falling US Treasury bond yields. Bond yields have fallen to the lowest level in almost a year, which indicates the gold market could potentially reach a bottom soon. Elsewhere in the markets, Palladium has actually been the best performing precious metal this year. The persisting strikes in the world's largest producer of palladium, South Africa, since January the 23rd has continued to push prices higher, sending the precious metal to multi-year highs. So moving into next week, traders are definitely shifting their focus towards the US Non-Farm Payroll report, which is scheduled for release on Friday, the 6th of June at 1:30 p.m. BST, 8:30 a.m. Eastern Daylight Time. So with that, we'll take a look at, we'll go over to the markets very shortly. Before doing so, I'm Phil Carr, professional trader, trainer, and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and also a regular contributor to a number of financial publications to speak at numerous trading seminars, webinars, and workshops. Joining me on this call is Nick Kalsi, and joining me in running the Gold and Silver Club, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of business and financial publications, and we've appeared frequently on financial television. Okay, so we'll take a look at the gold price now. Gold price this morning actually trading at $1,254 an ounce. So we'll take a look at that very shortly on the technicals too. Before doing so, just running you through the top trades of the week using the Gold and Silver Club signature trading strategy. So we'll go through those. The top trade of the week on the energies this week has actually been a nice breakout that we had earlier on in the week after a bit of a consolidation. So this was on the back end of last week. We had a nice setup this week. The risk on that trade was very simply 60 points risk, so $600 for each lot traded, for a nice big profit there of 210 points over the week for a 3-to-1 risk to reward and $2,100 profit for each lot traded. We, of course, took advantage of the big sell-off in gold this week, which we've been waiting on. We discussed actually on last week's call as well. This pennant which has been forming, it's been forming for the last month. tighter and tighter consolidation. As the market coils and coils and coils like this, it's due a breakout. And we certainly caught that breakout, and we had a really nice move here. So we had 190 points move from the downside from when we broke through key support and the trend line there as well. There are two opportunities to enter into that market, a break of the trend line, also a break of the major support there, highlighted on the yellow line. The risk on that trade was 65 points, so $650 for 190 points. Profit on that, $1,900 profit for a 3-to-1. So a really nice trade this week on gold. And we also caught a nice move on coffee. This coffee trade had been playing out over the last week or so. There was another opportunity to enter in, again, short at the beginning of this week. Very simply, the risk on that trade, 40 points risk, so $400 risk for each lot traded for a 95-point profit. So $950 for each lot traded in profit. So a nice 2-to-1. So there have been plenty of solid trades this week and lots of opportunities, it looks like, as we go into the following week as well. So with that, we'll go over to the technicals and we can take a look at how the market's looking moving forward into next week. Okay. So what you want to have a look at in the US dollar index, this downward trending channel, which we've been in really since the beginning of January. Okay, we've been in this downward trending channel, been getting lower highs, lower lows, and we came down and we bottomed down at the beginning of May. Around non-farm payroll actually is where we reached the bottom, came down to 78.92. Since then, there's been a big rally to the upside. We've broken above a key moving average. We've broken through some key trend lines here. And what we're looking at now today is to really clear above yesterday's highs and Wednesday's highs in order to get a further move to the upside here. You can see on the screen the next key level marked in white here, this is Fibonacci level above. This is where we are looking ultimately to target the price. Now, if we do get a move to the upside like that over the month of June, that will definitely put more pressure on gold and silver, and we could see further sell-off. So the US dollar index inverse correlation to the precious metals has played out very well this week, and I think we could see further upside here. We just need confirmation on a breakout to the upside at the moment. But US dollar index is certainly going to be one to watch today. You can see it's getting a bounce for key MA as well today. So do keep an eye on the US dollar index. It definitely looks like one of the top picks of the day. Next, we want to look at the gold market. So we look at gold. This is where, as discussed, this is the pennant formation. We broke through, got a nice break of that trend line, nice break of support. We've come down. We're looking at the moment, it's looking bearish again today. Really, the next psychological level of support here is going to be 1250, as you can see on my charts. And then we're looking, that's the key level to break at the moment. So for further downside momentum, that's what we're going to be looking at. We can see we're finishing the week fairly bearish here as well. You can see how strong the move has been here. And on the daily, we're looking to take advantage of opportunities to continue selling into this market. The only thing which may stop that is if we see a reversal on the US dollar index. We'll take a look at the news announcements towards the end of the call. But if we see a reversal on the US dollar index and we see that sell off, that could give some support to the gold market here. We can see we really need to clear above yesterday's highs in order to pick up some momentum and get a retracement. But at the moment, it looks pretty bearish on gold. We had a very similar situation on silver this week. We had a really nice sell-off. We've actually come down and we've found support right at the last month's lows here, at the end of April. So 1881, you can see the market. We had a break again of that consolidation we discussed on last week's webinar. We were looking for that pennant. You see that pennant with the upward trending trend channel, the downward trending trend channel was getting tighter and tighter. The market was coiling, was ready for a breakout. We finally broke that on Tuesday this week. Had some really nice sell opportunities on silver too. We've come down, really hit our profit targets, and then waiting for the next move lower here or a potential reversal. But it's got quite a lot of work to do to get out of this downward trend. And we are coming into a seasonality bearish bias. Normally, June provides weakness for the metals. So that's what we'll be looking at potentially to take out the lows here at 1881. Okay, just here, or 1880, in order to really start seeing some moves much lower here on silver. So we're going to be looking out for that, certainly. Now, as we go over to the oils looking interesting. Friday, we normally do pick up momentum and join the US session for oils. We've had some good opportunities this week to just trade based on breakout of this consolidation. Now, at the moment, we are just about maintaining this upward trending channel, which we've got at the moment on the WTI light sweet crude oil. What I'd be looking for today is, again, a break above yesterday's highs and get a nice move higher to these next key resistance levels, taking us up to the highs really of February here as well. So you can see about just above here around the 105 level. That's what we're looking for. Continued breakout to the upside. We're still just about maintaining the upward trend. We're still above a lot of key moving averages. So we're looking to see if we will get confirmation this afternoon. Also on Brent Crude Oil also still maintaining its upward trending channel here. So you can just draw very simply, you can see a couple of different trend lines here, which we can draw into the market here, but we're still just about maintaining support here. We'll see if we do break. So the major level, which I'll be looking for Brent to break here in order to start looking at potential sell shorts, is the 109.50 level. If we break that, we could be due a reversal back down to next key levels of support just below. We are finding quite a lot of strong resistance around 111. We can see we bounced off there just last week, and we've had quite a lot of consolidation between the 109.50 to the 111. So we're just tending to ricochet between those levels, consolidating, and now I'm looking for a breakout in either direction. But as I said, normally we pick up momentum on Friday afternoon during the US session. So we'll definitely keep a close eye on that. As we move across to the softs, actually, the softs have been tremendous over the last week. Look at this. Coffee still maintaining its downward trend here. We've had a really nice sell short on coffee really throughout most of May. We've taken advantage of this downward trending channel. We're again selling off quite hard this morning. I do favour to stay with the direction of the overall trend here on the coffee market. You can again see there's quite a clear trend channel on coffee, couple that we could just draw in just to show you the market is continuing really to sell off and not really, we're not seeing any bounces or bottom of the market just yet. And if we can take out this hammer, which we formed midweek on Wednesday, I think we're going to see lower prices here. We'll come back down to around about the 166 level, which would present more opportunities again. So coffee looking quite weak here, quite nice for sell shorts. Also take a look at wheat and corn, pretty strongly correlated. We're seeing a sell-off on those markets as well. We maintained short positions on these, actually broke through a major support level midweek. Again, we're still continuing with the overall downward trend here, is looking good. On wheat, we're still below a lot of key moving averages, and we're just targeting the next major support level, highlighted by the white and yellow, just supports, just looking to hit that as our next profit target around 623 on wheat. And similar situation with corn, really. Corn looking to stay just below these key moving averages. We've got a nice downward trend. Seasonality-wise, again, wheat and corn, this is a bearish time of year, particularly as we go into June as well. So we're looking just to take advantage of this continuing downtrend and pullback, which we've got at the moment on the softs, which has really been great for a lot of sell short opportunity. Now, if we move over to the copper market, you can see the daily trend channel on copper actually still being maintained. We're right slap bang in the middle of this trend channel at the moment. This is quite a lot going on this chart at the moment. So let me just delete one of these indicators for you. So we've essentially, to keep it very simple, we've got a very clear upward trending channel, which copper has maintained. Palladium's been very strong and platinum's been very strong to the upside too. We're maintaining this upward trending channel and really have been since we bottomed out in mid-March. So we're looking just to take advantage of trades within this overall channel. It's consolidating a little bit since we came up and hit that 3188 resistance level last week. We're looking for a retest of the support, the trend channel here, in order to get another move back up to the upper end of the trend channel as well. So the other scenario we'll be looking at is just a breakout up to the higher end of the trend channel, and then looking to take advantage of reversals back and hit resistance back within this this strong upward trend that we've got at the moment on copper. But you'll see the real stars at the moment have also been platinum and palladium, which copper has been following quite strongly. As we go over to last, we just have a look at one of the energies, natural gas. Natural gas was very interesting yesterday. We had on the nat gas inventories, we had a very quick sell short opportunity. We came down, hit a level of support, very quickly reversed. We're consolidating at the moment. NAS was one of our top trades this week. We had a nice breakout of consolidation, had a nice move up to resistance here, caught about just over a 200-point trade on that. And at the moment, what I'd be looking at really on that gas is just going out to some larger time frames here. And we're looking to really get a breakout of some serious consolidation to the upside at the moment on that gas. So we really want to let that play out over the course of this week, and then it's really setting up very nicely into June for continued breakouts. We're above all the key moving averages now, so we'd favour a bullish move to the upside on that gas at the moment. and it's looking very favorable for further breakouts. You can see the support, the resistance levels just above that we're looking to target for those breakouts, with a nice breakout yesterday as well above Wednesday's high. So there's quite a lot to be looking at. It is also the end of the month, guys. So this is the last trading day of May. So we've got quite a lot to look at as we go into June. Normally we do see a lot of fresh money go into the markets at the beginning of the month. So there's quite a few trade opportunities for us to look at as we go into next week. We'll definitely be covering those also on next week's call too. We'll look at those pre-NFP setups too. So do join us for that as well. But the technicals for the time being, looking very interesting as we go into next week. So with that, we'll just look at some of the key news announcements that we want to pay attention to as we do come into non-farm payroll week. Okay, so the major news announcements we want to look out for. We've got on Monday, the 2nd of June at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we've got the US ISM Manufacturing Pmi. So the Institute of Supply Management, the ISM Non-Manufacturing Purchasing Managers Index, reports on the overall economic condition of the non-manufacturing sector, including business activity, new orders, employment, and supply delivery. So a higher than expected reading should really be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar, which will inversely affect gold and silver, of course. Next Tuesday, 3rd of June, we've got the Chinese Hsb Manufacturing Pmi. That is at 2:25 BST, 9:45 p.m. EST. That data provides the overall view of the manufacturing sector and really acts as a leading indicator for the whole economy. So when the PMI is below 50, indicates manufacturing is declining, and a value above 50 indicates expansion. So China is a big buyer of gold, silver, copper, and oil. A stronger than expected number should be taken as positive for the markets and energies, and a lower than expected number should be taken as negative. Next Wednesday, the 4th of June, we have the 1:15 p.m. BST and 8:15 a.m. Eastern Time ADP non-farm employment change. That's the news that comes out prior to non-farm payroll. That report measures the monthly change in non-farm private employment. So the release 2 days ahead of government data, it's a good predictor of the non-farm payroll report. Higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Then next Wednesday, the 4th of June, we have the US Crude Oil Inventories. That data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report those levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, and a lower than expected reading should be taken as bullish. So that's at Wednesday, the 4th of June, 3:30 p.m. BST, 10:30 a.m. Eastern Time. That's a very highly lucrative trade opportunity on oil every week, which is scheduled in the calendar. Next Thursday, the 5th of June, we've got US natural gas storage. So very similar in that the Energy Information Administration provide nat gas storage report. Again, very tradable, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. That's at 3:30 p.m. BST, 10:30 a.m. Eastern Time. A higher than expected reading should be taken as bearish for natural gas, and a lower than expected reading should be taken as bullish. And then next Friday, the 6th of June at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we've got the US non-farm payroll. So the non-farm payroll, they measure the change in the number of people employed during the previous month. Excluding the farming industry, job creation is, of course, the foremost indicator of consumer spending. It accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish, inversely affect gold and silver. That will be one of the biggest, actually the biggest high impact news announcements next week. So do join us for next week's call as well. Okay, so just for a quick recap there for you for the top announcements of next week, we've got Monday, ISM Manufacturing Pmi, Tuesday, Chinese Hsb Manufacturing Pmi, Wednesday, ADP non-farm employment change, Wednesday, US crude oil inventories, Thursday, US natural gas storage, and Friday, US non-farm payroll. So if you do want to jot those down, those are the major news announcements next week, which will affect the commodities markets. And of course, if you would like to learn how to trade commodities with the Gold and Silver Club, you can find out more about our courses that are available at our international training centers and online as well. So you can find out more about our upcoming commodities training very simply to request information on the Gold and Silver Club coaching programs and live training, you can go to either www.jointhegoldensilverclub.com, or you can contact us at one of our offices, the Hong Kong, Budapest, Johannesburg, New York, or London office. Very simply, numbers on the screen there for you. So whichever one is closest to you, do get in contact, and we can arrange a course for you. So with that, also take advantage of our newsletter at www.thegoldensilverclub.com. You'll see free weekly report on the precious metals, on energies and agriculture, as well as live market and prices to analysis and prices to really give you a heads up for the week ahead. Okay, so do take advantage of that. It's free to you. Right. So with that, guys, that is pretty much a wrap for today's webinar. So there is quite a lot for us to look at as we go into next week. So I wish you good luck with your trading today and into next week. We'll definitely catch you for a pre-non-farm payroll call next week as well. And yeah, have a great weekend. If you want information on anything, do give us a call on the numbers on the screen. And a big thanks to FX Street for putting on today's call. Okay, everyone, have a great weekend, and we'll see you on the next one. Cheers. Bye-bye.